Hello, good afternoon everybody, and welcome to the third in the Sheffield Haworth, SH Consulting and NextWave Consulting Perspectives webinar series. So today's discussions focus on the future of operational resilience and what that means for organisations. My name's Kirsty Galloway, I'm a partner at NextWave Consulting, and I'll be acting as chair for this afternoon's panel. So before we start, a little bit of housekeeping. Please do use the messaging facility available at any time if you want to share any comments or you have any questions that you'd like to ask the panel. I'll try and weave your questions into our discussions as much as possible throughout the hour, and I aim to keep the last 10 to 15 minutes of the session specifically for Q&A. So now I'm excited to introduce this afternoon's panelists. So firstly, I'd like to introduce Alistair Heggie, COO of SEBA Bank. SEBA Bank is a pioneer in the financial industry that is redefining finance and providing a seamless, secure and easy to use bridge between digital and traditional assets. In August 2019, SEBA Bank received a Swiss banking and securities dealer license, the first time a reputed regulatory authority such as FINMA has granted a license to a financial services provider with a core capability in digital assets. So welcome, Alistair. Secondly, it's my pleasure to introduce Nick Whitfield, Chairman, Founder and Chief SEER at Panacea. So Panacea, for those of you who don't know, is a groundbreaking fintech providing a continuous controls monitoring platform for enterprise security and cybersecurity risk reduction. Panacea recently won the award for Best Regulatory Compliance Tool and Solutions at the 2020 SC Awards Europe, cybersecurity's most prestigious and competitive honour. So welcome, Nick. And finally, a warm welcome to Andrew Cortis. Andrew is a fellow partner of mine at NextWave Consulting and a subject matter expert on operational resilience. Andrew has worked on the operational resilience agenda for the Bank of England, amongst other clients. Andrew's key focus is to help navigate an operational resilience agenda across large transformation programs as clients navigate the new digital landscapes. So welcome everybody, and thank you for agreeing to be panelists today. So to start today's discussion, maybe I could come to you first, Andrew, and ask you, what does operational resilience mean in today's world, do you think?
Well, firstly, thank you for having me and welcoming me to the symposium on operational resilience. So it's a landmark topic this year. I think in response to your question, operational resilience in itself means so many things to so many different people, but in the specific context of financial services, the very essence of resilience for me is inherent in the act of risk taking. To be resilient, I think a system or an organization needs to have some spare or unused capacity, something to fall back on, shall we say, in a time of crisis. And so to have this thing or place to go, we need to understand through a defined period of time how long you can go there. Do you have enough resources? Do you have a predefined set of scenarios that you can execute while you're in a resilient situation? I think to do that first, you've got to effectively take and manage risk. I think the point about being able to think the unthinkable, regardless of whether you're a skeptical pessimist or perhaps a passionate optimist, it's a really important exercise when you're trying to understand resilience. So that's my view, I think.
Great. And Alistair, from SEBA Bank's point of view, I mean, what's your view on resilience, especially with the crypto assets license that you now have with SEBA Bank?
So I mean, first of all, it's the challenge with starting up a new bank is that it has all the trappings of a bank, and therefore a lot of what you look at and what you see and you have to build is very familiar. There's certain elements that are unique to digital assets, which are something that we, have had to develop ourselves as we're kind of trying to create that bridge between traditional finance and digital asset finance. One of the key features, obviously, or one of the key risks that we're trying to manage with respect to resilience is IT security risk and cyber risk. And it was always interesting to me as we look into the kind of ways in which you can defend against that. And obviously we have, our digital wallets are secured in a kind of combination of technical and physical security, and our hot wallets, which are connected to the internet, are hugely secure. There's a massive emphasis on, penetration testing. We work with vendors that specialize in that area to protect the private keys, which you need to move assets out of the addresses that are on the blockchain. But to be super secure, you then move away from being connected to the internet, and actually you go back to, it's a little bit old school. So you end up having digital wallets that are sitting in physical security, which is air-gapped, is disconnected from the internet. And then you can have multiple versions of that. This is so-called cold storage. And then you can have deep cold storage, where you put the wallets in, Swiss bunkers, in military installations in the mountains. There's all sorts of different models to that. But for me, that then introduces another layer of challenge around resilience and continuity, because as soon as you go physical, then you need to make sure that you're going physical with a design and a method which has also got redundancy in it.
Yeah.
So you can't just have it all in one place. So it brings so the digital age is bringing in new challenges for the physical security, a little bit like the vaults that we used to have in the banks.
Do you find, you're almost breaking new ground, being the first bank that has been granted a banking license to deal with digital assets? Are you having to sort of redefine the way forward in terms of operational resilience, given you can't look at best practices throughout the industries, much the way that other banks can?
Yes, I think, yes and no. I think there's stuff you leverage which across industry, which is super interesting. So, when you set up these digital asset wallets and using these hardware security modules, these HSMs they're called, you have to run these key ceremonies to set up the private keys. And we have, there's trustless principle to the way those key ceremonies are designed, so that nobody sees the secrets as they're being established through scripts that have been independently tested. And all of that kind of method, all of that security method has been in action for years in different scenarios. So you leverage from other industries, but I think you're right. I think there's two elements that are super kind of hard, well, not hard, but make it harder to deliver, is you also have to work with a regulator that has an understanding of the context of what you're talking about. And certainly we're very lucky in, say, this bank is based in Switzerland, and FINMA, the banking regulator here, built up their expertise and knowledge enough to be able to, understand how they can supervise banks and financial institutions that deal with digital assets. That's a precondition. And the second one is that is how they approach it in terms of regulation. Our operational resilience and business continuity regulation in Switzerland hasn't changed. So you then have to interpret it for the context of your environment. But that means that the auditors that come and check what you've done also have the level of knowledge and understanding to be able to audit what the controls that you have in place and the plans that you have in place. And I think that's just an evolution. But we're not, we might be, leading on a bank doing this, but then, as I say, other industries have done it, or these technical solutions for digital custody have been emerging for the last, few years. So we're not doing everything from scratch, and you've got to work with vendors, and you've got to work with open source communities, and you've got to work with the regulators.
Yeah, no, absolutely. So Alistair touched on cybersecurity there, Nick. Have you come across cybersecurity solutions for the digital assets, and how do you see the cybersecurity landscape today, and how do you envisage that progressing in the future with these new
products that are coming into banking?
Yeah, well, I mean, I liked Andrew's observation at the start that resilience means different things to different people in different contexts, and I always envisage the kind of palm tree waving in the gale. The point is to be flexible enough to survive and do the critical things that are necessary without breaking. It's not about perfection, it's about agility, it's about flexibility, it's about continuing to do the most important things and maybe letting some leaves drop that aren't super important at a particular time. So for me, that's really what resilience embodies. And I know we'll probably come on to talk about the FCA and PRA's understanding of it more particularly. Thank you for the cybersecurity question. Obviously, cyber's my discipline, the discipline of my company. I mean, we've seen an escalation over the years of cybersecurity incidents and breaches. And 10 years ago, average person on the street wouldn't know much about cybersecurity or care much about it. These days, it's in the newspapers every day. There's an incident somewhere in the world. It potentially has a dramatic impact on the company and its customers. And it is, unfortunately, an arms race. There's no, in the current risk environment for the people perpetrating cyber attacks on companies, the risk equation is pretty good for them, unfortunately. They're very unlikely to be penalized or go to prison or be caught because it's transnational, it's a cross-border problem. And so there is a lot of ROI available. Yeah, there's a great ROI. You can potentially make a lot of money doing it. You can potentially cause a lot of harm in the making of that money. And you can potentially cause a lot of harm because that's your intent. And of course, as Alistair's firm is and others are, the job of the defender is to try and understand what those threats are and therefore what risks they pose to our organizations and our employees and our customers. And what we've seen over the years is this kind of continued escalation of new attack vectors, new ways of breaking in, new ways of stealing things, new ways of breaking things, and then a commensurate investment and improvement in controls in order to stop and defend against those things. My observation is that we've been very piecemeal in the way that we've done that. A new threat has appeared, so we create a new control. Another new threat appeared, so we create a new control. What that has created is a plethora of controls.
Reactive controls as well.
Often very reactive, but also that's a lot of stuff to manage for people like Alistair, with the COO title. That's a lot of stuff to manage and take care of. And I think the opportunity for the future is really in line with where business is going, to create a much more data-driven and automated approach to understanding our assets or resources, we might call them. What do we have that is important to support critical business services, and an automated approach to measure those assets and measure the controls that are protecting them. And I think we're in the middle of this new kind of era where we'll see a transition from kind of point-in-time assessment of control to a fully automated measurement approach to control.
Yeah, no, absolutely. And picking up on that point you made about, this sort of increasing number of attacks and ferocity of those attacks, sometimes without impunity. The FCA and PRA issued their joint discussion paper in the UK on operational resilience in 2018. Here we are in 2021, still no actual dates for adoption of the new regulations that were outlined in the consultation paper, which closed, I believe, in October last year. So operational resilience was mentioned in the FCA's 2019-2020 business plan as one of their top priorities. It's not mentioned in their 2020-2021 business plan. So Andrew, do you think this means that the regulators' focus has shifted slightly away from this, maybe due to the global pandemic's almost been a real life proof to the regulators that financial institutions can be resilient in the face of black swan events such as the pandemic?
Yeah, it's a cogent observation, I think. To give them their credit, when the CP was finished, they did say that they were going to extend it slightly out to October to alleviate the effects of the pandemic. So it is, I think it's reflective of that. But it really, I think it's front and center of the attempts to try and draw together a more systematic view of what operational resilience is. They really have been quite explicit, I think, on how institutions should be looking at harm and how that's amplified out through the system, whether you're an FMI or in fact a customer. Basic things like, can I pay my mortgage, and if I can't, what happens? Institutions are going to have to, have an explanation for that, and that's going to be evidenced in the impact tolerance, which comes as part of this process. Look at your people, process, technology. Back to the point I made about resources, I think. You've got to think about this as well in the minds of the regulator. Regulators are not places that are festooned with resources. Typically, there's a requirement for specialist resources. I think if you look at this piece of specific regulation and the rule set, it's very much going to be pushed down into the institutions. We know it's going to be SMF 24, which is the ops function, Alistair, and many others, and that covers quite a wide range of BCP, cyber, third-party risk. So that's kind of interesting. But then you've got to look at the parallels as well. This regulation attempts to parallel some of the existing pieces. Who's it relevant to? Pretty much anyone who's a supervised entity, and also anyone who has already onboarded other pieces of regulation in recent times. So it's a bit of a high watermark in some senses, I think. There was perhaps a lack of understanding about the crossover between operational risk and operational resilience, because there's actually quite a lot of commonality. But the papers, I think, of which there've been 10 in the last 3 years, are quite explicit, and actually I think they're quite lucid in the way that the FCA and the PRA have gone about a more joined up approach to looking at it. I think now that that's washed through, I did check before I came on the call to make sure they hadn't ambushed us with a release this afternoon. I think that this is imminent, and there really are, I think, perhaps no excuses either for institutions to be surprised by this. So it's about understanding what your processes are, mapping those, looking at what those impact tolerances are going to be, making sure the board's aware of those, and not only that, the board sanctions them. Then there's scenario testing and the other things that go with it. So in short, no. And I think the last point I'll make is Moore's law. The speed of processing and the speed of computing, and how it increases every 2 years. Well, the speed of progression at this moment in time is perhaps equal to the speed of failure. So, and I think that's not a new concept, but certainly in the digital age, it's something that operational resilience will look to try and protect against, systemic failure. So we will need to react to risk events or failures more quickly, I think.
Yeah, no, absolutely. And often, being resilient as a financial institution and proving your resilience are often two quite different things, because the proof could be quite costly to obtain. I'll start coming to you. And so how do you think financial institutions can proceed at pace with their digital journeys, whilst building that resilience into their operations? So you don't have to go back and then say, oh, what about resilience? Let's spend another X million dollars to go back and fix it. Do you think that mindset is changed in COOs and CEOs at financial institutions from your point of view?
I think, so prior to being in this role, I spent 11 years with UBS, and was part of I was a COO for compliance and operational risk control there. Yeah. And we did a lot of work on the operating model. We did a lot of work looking and thinking about how we can, look at control, efficiency and effectiveness front to back. Yeah. And I can report, and I'm sure I'm not telling tales out of school here, that it was very difficult, right? And whole industries and consultancy have been built up on trying to help people sort that out, right? However, coming into this environment, I have to say, so I'll only really formatively talk to this. I'd say, I think what is super exciting is that there's a lot of commonality in objective. When you have the opportunity to start with a kind of blank sheet of paper, and when I joined Sabre, I started as the head of operational risk, and also I drove our initiatives to use process to map front to back, and in the processes define the controls, which allowed us to articulate a control framework fully integrated with our process view, and then articulate that to the regulator, which was very effective. And it's one of those things, if you take the right approach from the beginning, it's a lot easier than trying to re-engineer it halfway through, and also in a small enough environment where front to back is not a political conversation, right? There's no entrenched positions or views. So that's been really, that's been a very refreshing opportunity, but I would say it's part of this sort of fintech or techfin challenge or opportunity. I say we're a digital assets bank, but we also aspire to be a digital bank, because we see that success, commercial success in the future, is going to be built on our ability to scale. And we look at that kind of the triangle of control and cost and scale. And we're trying to say, we can, normally you look at it from a project management perspective and you're having to compromise, right, on time, materials and people and scope. Whereas with this, we think we can win on all three. So if you design it right first time, you have a clear understanding of your control framework integrated into your process view, and you're following good discipline around process improvement, you've got a chance to build a scalable digital bank for the future, for which you have the data, the real-time data, to be able to have a view on your control and a view on your resilience and a view. But that's an opportunity that I'm desperate to make sure that we as an organization, because that's one of our essentially unique opportunities as a startup. And whereas I think that, genuinely, I would say trying to reverse engineer that in a large organization is super tough.
Yeah. No, absolutely. And it's interesting, Nick, from your point of view, you're obviously speaking to a lot of clients in financial institutions every day. Have you seen that real understanding of the resilience agenda and building that into the new technology that's coming? Have you seen the CEOs, COOs, their mindset really change over the last 5 years, from your point of view? You're on mute, Nick. Yeah.
Damn, and we practiced that yesterday as well. And I got it. My resilience hasn't improved overnight. No, it's not always been called resilience, right? I think there are different terms that have been used over the years and by different professions, in this area. There are some trends that I'm seeing at the moment which are common across different types of financial institution, and one of them is the recognition that if we look at as a cybersecurity specialist, as the cybersecurity risk, which fits into technology risk, which fits into operational risk, currently appears to be carried by the IT and security organization. Yeah. And the reason is that they are experts and understand all of the myriad of technologies and tools that have been created, technology controls for cybersecurity risks. Mm-hmm. The problem with that is that they're not accountable for the risk. Dave in security is not accountable for cybersecurity risk to the bank. The business is responsible for risk, and you can only really understand the risk if you understand the business. And there's a wonderful quote by a CISO I use all the time, which is, no one cares about a vulnerability on a Linux machine, but everyone cares about a vulnerability in the payments process. Yeah. And those are the same thing. I just described them slightly differently. Yeah. And this is one of the bigger challenges we have today, is that the security professionals understand what Linux vulnerabilities are. The business does not care what a Linux vulnerability is. But if there's a vulnerability to their payments process, or for the business to be able to operate, they want to know all about it. So there is a big job in various stages of maturity going on to understand for the technology and cybersecurity technology landscape in an organization, how do we pivot that from being a broad view for technology people to a vertical business specific view? So instead of saying, what are our vulnerabilities across all of our machines in the bank, the question is, for this specific business critical application or portfolio of applications, for a start, what are all the resources that it depends on?
Yeah.
And those might be people or accounts or devices or applications. And what are the security challenges with all of those things? And give me that, because if we can translate it for the business, they can then make, you know, risk assessed decisions on how best to become resilient. At the moment, I think the emphasis is much too much within the security team and the security organization.
Yeah, no, absolutely. And that, in essence, is what the consultation paper from the FCA and PRA is trying to do. You know, it's trying to get organizations to identify their key processes front to back and put tolerances around them and describe it in terms of the business process instead of the individual Linux machines or spreadsheets or whatever else is involved in that process.
And it's a challenge to Alistair's point. I know, having founded a startup, I understand the series of hurdles that are thrown at us, and resilience is about seeing each one as an opportunity. And it looks like you're doing that with in terms of resilience. But for a bank that's been around for 100 years, that what you've just described, because that mapping of what are our critical business services to what is all the stuff that makes them happen, that is not a 3-month consulting exercise. That is an ongoing. And even if you wrote it down, which several have,
it will change as soon as you've done it. Yeah,
it's finished and it's out of date the next day. So it's really a real challenge for a legacy organization.
Yeah, exactly. And talking about those challenges, Andrew, from your point of view, having, you know, helped a number of organizations through that, you know, operational resilience sort of agenda, what sort of things are you seeing in client science as they sort of grapple with these challenges?
So it's really interesting because to your point, Nick, I think depending on the maturity of the organization, it really depends how much support you get further up the chain of command. I think some of the new organizations, don't want to name them, but some of them, for example, some of the newer banks have a much better understanding of the impacts of an outage. They understand that most of their revenue will come from mobile devices, for example, and if that channel is taken out, then it's an instant impact. Others that it is actually interesting because financial services sort of, you know, in some areas is a shining paragon of progression, but in other areas it isn't. And some of the manufacturing institutions that I've seen are really keen to look at their organizations more holistically, especially where they're federated across geographies, perhaps where they have built up a capability by acquisition. Then they will go and look at what capabilities are already within the organization and try and enhance those for the rest of the organization. And frankly, some of them are really not mature at all. I sort of like to use an analogy around the Mars rover. You know, that's imagine the amount of risks that were taken, the amount of calculations that were done to put Curiosity on Mars. So NASA could do that, but could, you know, Elon Musk or LeasePlan, for example, you know, just to sort of pick a random company. It's about understanding whether you've got the capability to do certain things and where you are in the maturity life cycle. And some of them don't have some of the basic defenses that you would expect to have in place, even from physical security, let alone, you know, DR recovery. Well, again, I think institutions and seniors need to start thinking about the interconnectivity between silos in organizations. And again, to your point about how do you measure this, many of the current frameworks to support measurement, SANS 20, ISO 27000, they are quite laborious exercises to maintain. Yes, you must have policies. Yes, you must have procedures, and you must be a good custodian of your data. But if you don't understand how to manage that in the round, then you won't be resilient. There's lots of examples. Morrison's is a great example, the data being taken out by someone in HR. There's plenty of examples of technical attacks, but you've got to think of it asymmetrically. What would happen if someone did 5 things at once to my organization? Truck bomb in India, someone, an armed event in the street, and a cyber attack at the same time. Could you manage that? And could you recover from it? Could you learn from it? What's kind of interesting in the definition from the PRA and the FCA, it really talks about system-wide learning by institutions. It's not just about individual institutions.
Yeah, no, it's very interesting. And talking about, obviously every institution is different in terms of where they are on the maturity curve, but with the advancement of those ecosystems that are now building up around banks working with different types of fintechs, different types of technology, services and products, evolving into this sort of ecosystem, which increases all the points of failure and risk. And so, Nick, how do you see, obviously from a cybersecurity point of view, as banks create partnerships with different new fintechs and firms, they look at outsourcing different parts of their process in order to maintain their competitiveness and remain current and embrace some of this newer technology. How do you see them, being able to continue at pace with that without raising the stakes in terms of their, cyber resilience or operational resilience?
Yeah, it's one that our clients wrestle with a lot. Is the third party assurance.
Yeah.
As we choose to engage potentially much smaller organizations, how do we know that we're secure? Or for that matter, any organization, a pretty decent sized financial institution will have thousands of suppliers that they're sharing data with in some manner or other. And I suppose from the bank's point of view, it's challenging, right? Regulatory compliance has been a massive bonus for them over the years because it's a huge barrier to entry for anyone that wants to break into the sector. So on the one hand, they might complain about how restrictive these compliance regimes are, but actually it's a high barrier to entry for anyone. And if you're sitting on billions in the bank, then maybe it's easier for you to comply than a startup, for example. But the fintechs have started taking bites away from the banks where there's perhaps less regulation, or by offering niche services where they can specialize, very much the startup model of do one thing really, really well, better than everybody else, and become the standard for that. Don't try and do everything that a universal bank does, because you're never going to get there. So I think they're trying to balance these risks of, we have to innovate, but not so much so that the risk increases too much. And on the other hand, we want to maybe lobby for more regulatory compliance, because that's harder for the newcomers to the market to comply with as well. So I'm no expert in this. This is secondhand. This is what I see in the industry. But I can see it. There's a lot of different forces at play here. And of course, whenever there's a significant incident of some sort, then that changes the landscape again.
Yeah, absolutely. Well, it all comes back to the bank, doesn't it? So that's always, a wake-up call in terms of reassessing risk. And Alistair, Sabre's banks obviously are startups and maybe got less of that legacy tech or those legacy considerations. But, from your point of view, you must be also joining that ecosystem and taking advantage of some of those, fintechs that have established themselves as best of breed in some of these products and services. How are you looking at these third-party sort of risk assessments for some of these fintechs?
Yeah, it's interesting. It's interesting, isn't it? Because I remember when we looked at sitting in a larger organization, you look at the vendor relationships and all you see is risk. You just think, how are we managing all of that, and how do we know, and how can we be confident we've done the due diligence, right? I think from our side, we've built the bank in a fairly short period of time, and trying to provide a broader range of services, not very narrow, but trying to be both traditional finance as well as digital. And that's been the strategy that we've taken is to buy versus build where it's not a competitive advantage. Specific technology solutions we've built, specific custody solutions for digital assets we've built in partnership with vendors. But in the general case, we're looking at vendors to help us to establish capability quickly. And in some cases, my favorite example is cloud, right? So, the way in which the cloud providers now run and manage those infrastructures is at a level of quality which, I wouldn't want to try and replicate myself, right? Yeah. And so there's some examples where they're coming with more secure, better standards. There's a real economy of scale in the solution, or there's a, like Taurus, the partner we have for our HSM solution, sort of our hot wallets. They, they've invested lots of money in the security of their solutions, which we can stand on the back of. Clearly, you still have some risk as soon as you start pushing operations outside, or you need to be careful to think about solutions which you perceive as non-critical, but then might open up yourself to different risks. It's super important, but at the moment, I think we see it more as an opportunity to work with vendors that bring in capability that we don't want to have to build ourselves, or just we would never be able to replicate in a reasonable time frame.
Yeah. It really is a sort of very difficult question, I think, for the banks, because a lot of these fintechs, they work in 2-year funding cycles. So, how do you assess the risk of that if you're spending millions to integrate that fintech, but have they got money past 2 years? Or, we look at the failure rate for fintechs at the moment. I think I was looking at something the other day, so there's 28,000 of them around at the moment, and 9 out of 10 of them won't be around in the medium term. So that's a tremendous minefield that the banks have to pick through when deciding these partnerships to go into.
Yeah, I mean, there's ways in which you can view that, and you can look at ways to mitigate, risks in that respect. However, certainly from our perspective, we are agile enough. For me, it's a bit like throwing stones in a glass house when you say, well, how do you know your funding is going to last more than 2 years? But it's we are looking to partner with organizations that have got a similar mindset and a similar agility and ambition. So, quite often that correlates also with what we can afford, or what the scale at which they're operating at. And I think the big mismatch is where you have these larger organizations that are trying to engage innovative small companies, and they just can't get past the corporate sourcing policy, because there's only 3 guys that run the
procurement
thing,
says no.
About. However, we look to do more collaborative agreements and partnerships, and in the end, the right way to manage those risks, in my view, is to look at a services architecture where you don't buy just a bit of software. You try and buy a service, and then make sure that you've got optionality in where you can source that service from.
Yeah, no, it's true. I mean, because more if in the financial services industry, being agile is the way to survive, really. In this highly competitive landscape with lots of new people and new players coming into it. I mean, Andrew, from your point of view, that agility and operational resilience, in some ways, they seem a bit of anathema to sort of put together. I mean, what's your view on that?
I personally think they go hand in hand, and I think it's probably again a sort of a burgeoning thought amongst people, because if you can satisfy your customer demands, by segment, not just by producing one size that fits all, then culturally, I think to your point, Alistair, you will be more agile, perhaps. And if you are more agile, then you will be more adept at being able to manage a resilience, perhaps even an outage or an event that would take out part of your critical business service or function. So, and I think we see that actually a lot in other industries. I've heard examples cited of manufacturing. Again, fashion, for example, is a really good example where you can react to customer demand quite quickly in an agile way, producing certain things very quickly. And that was an example, I think, that works there. I think as we see, as we talked about the development of computing, and we see the development of even quantum computing, that is perhaps going to quite quickly make some of the protections that we have in place redundant. Pretty much any of this stuff, even when you look at cloud is a concentration risk for pretty much anyone that uses it, if you have the capability and the intent to disrupt it. And when you start to look at that arms race, I think you said earlier, Nick, you really start to only see certain entities, usually state-sponsored actors, that can then disrupt that space. And it's about whether you want to make yourself a less compelling target or not. And the way to do that is really to start with the basics. If you're not mature enough, then you really need to understand what you're trying to achieve, and make some really small amendments to your people, your processes, or your technology. And procuring a piece of technology because others are doing it is not the right answer. I've argued before that certainly on the cyber side, some of it's become or was very commoditized, and there's no point in purchasing a commodity unless you know what you want to do with it. Is it a core protection to a critical business service? And if it isn't, what's the business case?
Yeah, I mean that means something. Coming to the cybersecurity view on that, Nick, that must be something from your side. Keeping ahead of what is the latest cybersecurity risk, and so that organizations can be resilient against that risk. I mean, that's a huge challenge given the number of people that are throwing stones at the firewalls of the various institutions. I mean, how do you do that?
Well, it's very difficult.
I can imagine.
It's really difficult. And because of the legacy and the acquisitions and the lack of investment in certain parts of technology, I used to build trading systems once upon a time, and do lots of things I probably wouldn't do now as a security professional. But when I started looking at security instead, what surprised me was the lack of kind of coherent data about security hygiene. So if you think about trying to protect an organization, there are threats coming in that you just described, whether they're foreign nation states or a script kiddie in their bedroom or an organized crime gang. There are threats coming in. They're trying to reach your assets. They're trying to turn things off or steal things, basically. Those assets are vulnerable. They have vulnerabilities. And then we have our control frameworks to protect those assets. And these are key. There are key aspects of hygiene that if you do that well, you don't have to worry about 99% of the threats. And these are things like understanding what computers you have. You would have thought that would be
versions of software you've got.
Number one priority. Critical security control 1 is understand your hardware devices. Critical security control 2, understand your software. And large organizations don't. They don't, and it's because it's hard, because they've got so much manual process. They've been built up over the years with a patchwork quilt. Unlike Alistair's lucky situation of being able to design
brand shiny new.
Yeah, that I think the real challenge for organizations is how do we get our hygiene to a high enough standard that we don't have to worry about what I would call commodity threats. You don't want to be worrying about limited capability organized crime gangs and script kiddies in their bedrooms and these kinds of things. The more you can have your hygiene in order and your defenses as automated as possible, then you can spend your manual kind of intellectual horsepower on how do we stop the more advanced stuff? How do we get in? How do we make sure that we're prepared against a less normal attack? And so hygiene is really critical. If your hygiene is not organized, and to the point on the arms race, in security, we used to make a big deal of this arms race, but now I would say that there is an arms race, but most attacks, I'd say 90% of attacks are, the companies are breached because A, they're attacked, but B, because a control fails. Something wasn't patched, but it was due to be patched. A firewall was misconfigured. The endpoint protection wasn't running on the device a user had too many privileges or a toxic combination of privileges. These are control failures, and we can deal with those in our own time. We don't have to be reactive to those. We can be proactive about those. And I think that's really where investment needs to go, to do that on as much of an automatic data-driven basis as possible. Manuals not going to work. There aren't enough security and risk professionals in the world for all the different types of attack, all the different types of technology, to maintain all the different types of cybersecurity tools that are being bought, hundreds and hundreds. There aren't enough people. So we need to have an automated approach to this and use our manual, slow horsepower on the stuff that's really advanced. That's how I would see it going.
And how much do you think AI will have to play in the future for this area?
Well, there's two sides to that coin. It's a bit like people. If you consider the AI a person, are people going to be helpful to security? It's like, well, yeah, if they've got the organizations and their customers' best interests at heart, they'll be great. And that's it's kind of lighthearted, but it's true. It's true. How do we know in the future what AIs are going to think is a good thing to do? How much control will be kept over the parameters within which they can operate? There are countries in the world that have assigned human rights to AIs, so they are protected about what they want to do and how they might behave. And I'm not a doom and gloom merchant on this. I'm a realist. There are lots and lots of different ways that an AI could behave, in the same way there are lots and lots of ways that people could behave. And I don't mean to be alarmist, but this is the nature of AI, is that it learns without you telling it exactly what to do.
Yeah. So what it learns, you need to be careful.
A lot of it, I think, will depend on a positive moral and ethical discussion happening at the same time as the development of AI, to make sure that it's heading in a direction which is beneficial for the human race and the planet and everything else that lives on it.
No, so true, so true. Yeah, we've got about 12 minutes left. So just for anyone, if you have any questions you'd like me to put to the panel, please do put them in the chat, and I'll endeavour to sort of weave them into the next 10 minutes of conversation. So it's operational resilience, Andrew. Do you think it's a commercial opportunity for financial institutions in any way? Is there how could banks monetize it if so?
Yeah, I think it's a fantastic question, one perhaps that hasn't had as much thought applied to it as it could have. I again will cite a couple of examples, I think, around the business case. We all know how difficult it is to get investment slate for specific projects, for things that haven't happened but might happen. I think the direction of travel is changing, and if you look at, again, some recent events, talk perhaps not so recent, but their share price was what, £4 when they were attacked. It's now 96p. Not all of that can be attributed to the attack, but quite a lot of it could be. TSB is another great example around cost of not being resilient. And again, thinking about this slightly differently, that was a fairly innocuous piece of, I say innocuous, obviously a large scale migration of data and customers, but not something that's overly complex, been done many times before. Yeah, that cost,
controls around system change.
Exactly. And the bill, as yet, as at today, the cost was 330 million, and I think the last example I cite, and I'm not entirely sure of how they've made up the numbers, but it's obviously they've applied some quantitative analytics to it in conjunction with perhaps some moral algebra. The cost of an outage on average to a UK regulated entity is about £700,000. So I think that the business case is there, and if the business case isn't there, the accountability and the responsibility is very firmly there with the SMF 24. How firms will, to your question, really monetize it, I think is by it's quite risky, but by being able to describe their product, their service as one which is more reliable than other institutions. I think if you look at the ability to lay off cyber risk, so if I know that my institution is N good and it has N protections and I can score that, then as an insurer, I can then say, well, look, the underlying peril or risk for that institution, even if it's a smaller business, is going to be less expensive. Now, you might say, well, why would the insurance company care about getting less premium? Well, if it becomes systemic, we all remember AIG in the crash, and I see there's a question there around contagion. If all of the insurers start coming under pressure because there's a systemic cyber event or an outage and they have to pay out, then surely it makes sense for institutions to prove that they are better protected, and therefore you can the reinsurance risk can be laid off, or certainly can be managed. I think it's Darwinian, that the institutions that are able to adapt and evolve more quickly and protect themselves better will survive in a systemic event. And they will be there to reap the rewards post event if it's something it's significant.
Yeah, no, absolutely. Nick or Alistair, any thoughts on that?
I have a comment. I think in terms of commercializing it, I think it's super interesting. I mean, and I think you're describing what is the commercial value of surviving. Right? What is the commercial value of surviving?
Huge.
A systemic event, or just not being caught out along the way? And I think that's and those business cases, essentially cost avoidance business cases, as we all know, possibly hard to defend. I think I much prefer to look at it from a certainly an opportunity perspective and a client experience perspective. So clearly, if you can justify investment, and Nick, I completely agree with you, do the basics and do them bloody well and do them with data, and then already you're 90% solving the problem. That's amazing, right? And I can tell you from our experience just starting up the bank, and I know we're saying we can draw it all from scratch. I keep saying we create legacy every single day, right? We're creating legacy every single day. So we better make the right step forward if we can, because it will be a positive legacy. But we face exactly the same issues, right? Where are all our assets? Do we have a handling? Are all the endpoints, monitoring working? Have we created what's that as we kind of continue to build the bank? And it's the same game. However, unique to digital assets, we are selling security and in custody specifically as a unique selling proposition to our clients. And I can tell you it's hilarious, right? Because initially everyone's like, well, tell us exactly about your security and tell us exactly how it works. And so we tell them, and then they're like, yeah, whatever, done, right? And then we say, well, which one do you want? Do you want the hot storage, the cold storage, the deep cold storage? And they just say, well, okay, which one's more convenient, right? And so although it is a selling point and it is a core value proposition for our business, it's very funny when you focus on the client experience, because they care to an extent, right? And at some point they'd stop caring, they just want to get cheaper and faster and better. And so it's a very it's interesting that it can be in certain scenarios a selling point directly, but I still think even in those circumstances it becomes old news quite quickly.
Yeah, is that your experience as well, Nick?
Yeah, it depends who you talk to, doesn't it? It's like someone wants to get it done fast and cheap, and someone wants to do it as well as possible. Someone wants it as securely as possible. It's like, well, you can't have them all. So where will you end up? I think for me, it's resilience as a differentiator is a bit like, I know one or two banks see compliance as a differentiator. If I can comply more effectively and cheaper than other banks, then I have a competitive advantage. I think resilience is similar. The better we can define a quality, a risk appetite that really makes sense, and be able to execute resilience in line with that risk appetite, then we're doing really well. And that's the key to it. Everything I just said is really hard, though. That's the problem. Understanding what risk appetite actually means and the words you write down and how you talk about it is hard, and then trying to have policies, procedures, controls, and everything else that implements that risk appetite and measures against it is suitably difficult. But really, that's what it's about. Whenever there's a breach, first thing I think is, do I think that was within their risk appetite? And because the automatic reaction is, oh no, that's terrible. It's like, well, I don't know, was it? Did they expect that? Is that a once every 10-year event and they've just had it? That there is a, there is a question mark about, some of these things. But yeah, that's what I'd put it down to: risk appetite, and is resilience within risk appetite. If it is, and you're doing that cheaply, then you've done brilliantly.
Yeah, no, absolutely. So we've got a few minutes left. So just in closing, just want to ask each of you, just for your final thoughts on sort of, where the industry is going in terms of operational resilience and the future of operational resilience. So Andrew, should I start with you?
Sure. It's a bit like that sort of Game of Thrones comment, isn't it? Winter is coming. Well, the rules are coming. Have no doubt. I don't necessarily think that more regulation is a good thing. I think there is a moral hazard with it. John Campbell, who was a civil servant, decided to go off to Hong Kong and start a low legislation, low tax regime entity, and that was Hong Kong. And so there are arguments to say that having less regulatory frameworks are better for business. But where institutions are now being are being asked by policy and supervisory statements to do certain things, then you've got to ask questions about their motive, I suppose. And operational resilience should be front and center of any business that really wants to service and satisfy its customers, because ultimately that's why they exist. And I think certainly the DP and CP have stated that. So in closing, for me, make sure that you understand your processes, make sure that you understand what resources you have to hand, what your impact tolerances are, how long you can survive a particular event or failure, and more importantly, what happens after that. How do you learn from that? It's an ongoing process, right? You don't need to do it today. You need to have a roadmap that allows you to get to a certain level based on risk appetite and risk tolerance.
Yeah, brilliant. Thanks. Alistair, final comments from you on the future of operational resilience as you see it from Sabre Bank's point of view, or any thoughts?
Yeah, I mean, look, I think in summary for me, it's you got to see it. It's got to be part of what also is making you successful as a company. So in the future, I think digital banking is going to increasingly be more automated, more scalable. Those are all very synergistic with better designed operations, better managed, more resilient operations. And I think that that to me, from just a commercial perspective, I think is a good, strong direction for us to go in. And I would say that increasingly also with maybe a little bit disintermediation in terms of who does what in that ecosystem. I think how you work with vendors is going to be critical to that, and partners, and I would say data, absolutely, right? Yeah. Anything you can standardize around controls would be super helpful to allow insurance companies to assess more realistically, but also data that supports doing your basics well. I think, Nick, you're absolutely right. I think that's exactly the right focus.
Yeah, no, brilliant. And finally, Nick, any closing thoughts from you?
I think Alistair and I are on a very similar page with this. It's about data and automation as far as possible, visibility and measurement, particularly of hygiene, aspects of hygiene, super important, and accountability. One of my favorite metrics that one of our customers uses is, and this is at board level, is in their configuration management database, CMDB for those enthusiasts, which stores information about devices and applications and so on in the organization. The level of completeness of the field which says the accountable owner for this thing is a key metric, one of the 5 key metrics at board level, because the reasoning is if this thing has an accountable owner and they know they're accountable, it's more likely than not that they're going to be paying attention to it. And that's I really like that one. That's a nice metric. But yeah, data-driven automation, measurement, and single version of truth not multiple versions of truth. Good. These types of aspects are how this will all go in the future. And I think if you can't do that, you're going to struggle, because the manual effort to try and do this poorly is just not going to be sustainable.
Yeah, absolutely. Well, thank you all so much. Such an interesting discussion. Thank you so much for your time today and for your thoughts and observations. We've come to the end of the hour, and I hope the audience found the conversation interesting and thought-provoking. In closing, I'd like to thank Fran Parcel of Sheffield Howarth for the logistics and her excellent work behind the scenes, trying to make sure everything runs smoothly. And also thank you to Charles Rustin of SH Consulting and Tony Clark of NextWave for organising the Perspective series. So please look out for the next session, which will be a discussion around the workforce of the future. So thank you, and goodbye, everybody.
Thank you.
Thanks all.
Bye-bye.
Thanks.